So we remember with the foreclosure market, there are huge discounts. Now the thing you've got to remember is that the reason that there are these huge discounts is because it's a cash-only market. Now, you would recall this morning I was saying lenders basically want to get these properties off their book as quickly as possible, and they are prepared to cut deals, they're prepared to discount heavily, but generally speaking, they're not prepared to finance these deals for you. Now, with fewer buyers in the market and virtually no liquidity, the banks are listening. For the first time in history, you can go to a bank, make a ridiculous offer, and they're not going to balk at you. Now, the question that I've had from a number of students is finance limiting? And really, creativity is what really pays in this market. You know, as you've seen from some of the deals that we've talked about, we're not talking about necessarily huge sums of money. You know, the pre-foreclosure market that we talked about this morning, where you're trying to get in by negotiating between a homeowner and a lender, is where you can make some really good deals. So it's in those sorts of deals that you are getting involved with the bank and essentially getting them to finance your deals. But in the post-foreclosure market, it is a cash-only market. You know, it's really tough as a non-resident at the moment getting any kind of financing in the US. Now, there are exceptions to that, and I spoke to a fellow the other day who, for whatever reason, has found a bank who will loan him the money to buy a house if he promises to live in it. So I'm not really sure what the connection is there, but this guy's going to go ahead and buy this house, but actually treat it as an investment. So it is possible, but it's tough. The bottom line is that right now the banks are in a very fearful state. We're in the middle of a crisis. Everybody's waiting to see what happens over the next 6, 12, 18 months to see when liquidity will improve. I guess the reality is that even prior to the crisis, there were very few loan programs that were specifically designed for foreign real estate investors. The main reason for this is that in the US, the whole concept of having a credit score is very, very important to the banks. And right now, as a foreign investor going in for the first time, where maybe you've got no history there, it's very hard for them to gauge what you'd be like. Generally speaking, lenders will not lend you without a credit score. Now, the three bodies that really sort of administer that are Equifax, Experian, and TransUnion. Now, I'm not saying it's impossible. You can actually get lending there if you kind of go about it the right way and you find a bank that's prepared to work with you. Most lenders will want proof of income, so regardless of the fact that you're based here in Australia, you're going to have to find some way of verifying income to them. And another really interesting thing is, if you're buying, say, a higher end property, let's say you're going to buy a property for 300,000, 400,000, 500,000, generally speaking, if you're borrowing from a bank in the US and you're taking across your deposit from Australia, the US banks will actually require what they call a seasoning of the money. Now, what that means is that it has to physically sit in an American bank account for a period of time before they'll allow you to use it and apply it against a property. Now, typically, this is anywhere from sort of, 3 to 6 months. So it's not a short period of time. So you've got to be prepared to, allow that to happen.